Welcome to ArtPrice TV. Today I'm in London together with Bevan Duncan from Mintus. Mintus is an innovative and unique alternative investment platform that allows investors for the first time to invest in new and innovative ways in high-value art. As we all know, art has been for the last 40 years one of the best performing asset classes. So let's jump right into this. Bevan, why should people look at allocating capital to art?
The global value of the art market is estimated at $1.7 trillion, and there's $65 billion worth of transactions each year. To put that into context, the global value of the private equity market is estimated at about $3.5 trillion. So the global art market is large, it's well established, and it's growing at about 5 to 8% each year. In addition to that, the long-term investment returns have been very strong. The ArtPrice 100 index has outperformed the S&P 500 from 2000 to 2022 by 363%. In addition to the strong returns, they've also been delivered with low levels of correlation to traditional bond and equity markets. Through the COVID pandemic, contemporary art market grew in value by 6.7% when a lot of other asset classes delivered negative returns. So you've got a big, large, well-established market, strong returns and low correlation. So there's been a number of reports commissioned over this past few years, one from Citi, another from UBS, recommending that asset allocators consider putting 3 to 10%, depending on the rest of the mix of the portfolio, into contemporary fine art to improve diversification and improve overall risk-adjusted returns. Historically, access to the art market has been limited to ultra-high net worth individuals and a small handful of institutions that have got extensive experience of investing in art. And the reason for that is because there's a number of structural barriers to investing into the art market. The first one is just the ticket size. So the type of art, which is investment quality, which is where Mintus focuses, it got a value of between $1.5 million up to $20 million. To invest that sort of money into a single piece of artwork, you need to have considerable wealth to make that a sensible portfolio allocation decision. In addition to that, you need to be able to access the art. We are sort of buying and selling really scarce art. There's a limited number of Warhols, Basquiat's, Picasso's and Hockney paintings. And you can't just walk into a gallery and procure one of these. If you did walk into a gallery, you'd probably be put onto a waiting list to access a piece of art like the ones that we acquire. And there might be other strings attached. You might not be able to sell it within a certain period of time, or you may be asked to buy another piece of art to donate to an exhibition or a gallery or a museum to allow you to then buy the piece that you really want. In addition to accessibility, there's also buying art that's going to appreciate in value. And buying art for investment purposes is very different to buying it to hang on your wall. In addition to those points, there's also the fees involved. If you buy from a gallery or at auction, you may pay fees anywhere from between 20% to 50%. Significant fee friction buying through those channels to market. And then the final sort of structural barrier is that if you buy art, you obviously need to store it and insure it. So Mintus has built a platform, a technology platform with art expertise and strategic relationships that remove these structural barriers and make art an investable asset class. Mintus is built on 3 foundational pillars and key differentiators. The first is trust. The business spent over 12 months getting FCA authorization. We are the only art investment platform in the UK or Europe that's got authorization. So that's a key differentiator for us, and that governs the way that we operate. So there's transparency in the art that we're buying. There's transparency in our fee model. We also make things like our valuation reports that we get done by independent valuers available to investors so they can see what the independent appraisals are and then what the price is that we are paying. Alongside that trust, and another builder of trust is clearly the team that we've built at Mintus. Martin Slenderbrook is the chair of the business. He's former CEO of Jupiter Asset Management and is also chair of Robeco, which is a large European asset manager. Timur Osman, our founder, is an ex-Microsoft managing director. His last role was running the advanced technical solutions team in the UK. So got extensive sort of blockchain, AI, machine learning experience, as well as a strong commercial background. Brett Gorvey is an advisor to the business and chairs our art investment committee. And he's one of the leading global figures in the contemporary art market. He was chairman of Christie's for 16 years. So an absolutely critical part of our art and selection and curation team. In addition to Brett, Chris Calladine also sits on our board. Chris is a managing director at Rothschild and runs their M&A practice in the financial services sector. So we've really built a team that brings extensive experience and skills from both the finance and technology worlds, but also, really importantly, the art market. The second pillar is our technology platform. It's all blockchain enabled. It allows us to issue as many number of shares that we want in as many companies as we like. So it's very scalable and well invested. The third pillar is really the art supply and selection process. As I talked about earlier, there are structural barriers to entering this market. One of them is supply. So one of the strategic investors in Mintus has an art collection of over $10 billion. So that, combined with the other relationships that we have got, means that Mintus has got access to over $12 billion worth of artwork. And we'll be looking to bring $150 million of that artwork onto the platform in 2023. That will go through a very rigorous selection process. So we've taken a private equity investment process and adapted that into the art market. So it's very data driven, very objective. We leverage independent experts and we build an investment case from the day that we acquire that painting. So those three things combined mean that we think we'll consistently deliver the returns that our investors require. Buying art for investment purposes is very different to buying art to hang on your wall. So at Mintus, we have a very clear purchase criteria. We focus on the contemporary post-war part of the art market because that's where there is the strongest capital appreciation, but also that's where the records are strongest. So we can get good performance data, but also provenance data. So there's less chance of sort of fake and forgeries operating in that part of the market. We are also looking to bring really blue chip artists onto the platform. So Warhol, Basquiat's, Picasso's, Hockney's, Kusama's, George Condo is another really strongly performing artist. So these are artists that have got sustained auction track records. They have got international appeal, and we're buying artworks that are in between $1.5 million to $20 million. So they are got strong downside risk protection, but also upside capital appreciation. Anything below the sort of $1.5 million in the art market, you are getting into a more risky space. It's almost like the venture capital part of the art market. You could make fantastic returns, but there's also a higher probability of capital risk. And that's not the part of the market that Mintus wants to play in. So once we've done our screening of the market, we've picked out where we think there is strong structural growth. Then we really sort of dive into the individual artists and the artwork. So we've got an AI tool which we've built in-house, which takes both structured and unstructured data and pulls that into a data lake. So this is information about auction track record. This is information from events, from conferences, from Sotheby's, Christie's and Phillips, from social media scrapes. So we're taking all that information into a data lake, running an algorithm over that information to find out where there's price velocity and momentum in the market. So we're backing those artists that we know are going to appreciate in price over the next sort of 5 to 10 years. But conversely, it also tells us where we think the market might be overheated and where we should stay away from that part of the market because there might be a small bubble or it might be overheated. So we take all that data, we then combine it with the expertise that we've got within our network. So if we're looking to buy a Warhol, for example, we are talking to one of the world leaders in Warhols that has been buying and selling Warhols for years, knows who is going to buy that painting, at what price, and over what time frame. So we're taking all these things and building it into an investment case, which is then reviewed by our investment committee. Once it's approved by the investment committee, we then complete the SPA and that piece of art goes onto the platform. Within Mintus, we've got a number of people that have worked in private equity and investment banking, so very experienced investors. So what we've done is we've taken a private equity investment process and adapted that into the art market. So we are extremely data-driven. We really leverage independent art experts, but also independent valuation houses. So once a piece of artwork has gone through our initial screening process, we then commission 3 independent valuations to be completed. We then take an average of the independently appraised valuations and then apply a 10 to 15% margin of safety to that valuation. So we're looking to acquire with that buffer in the price. If we can't get that a margin of safety, we will go back to the vendor and look to renegotiate, or in some cases we will walk away from that sort of acquisition. So we've got a very structured, methodical investment process, which then comes together in a detailed investment committee paper, which is then reviewed by our art investment committee. That art investment committee is chaired by an independent individual called Brett Gorvey. Brett Gorvey is one of the market leaders in the contemporary art market. He was the chair of Christie's for 16 years, and he now runs, alongside his partners, one of the sort of most renowned galleries globally. Qualifying retail investors can access art on the Mintus platform directly on the Mintus website, which is mintus.com. The minimum investment into an individual painting is $3,000. So we're really looking to sort of democratize the asset class and open that up to qualifying investors so they can obviously increase the allocation to alternatives and to art specifically. There's been a lot of research published recently which shows the private wealth individuals or private wealth managers are underallocated to alternatives. Probably about 1 to 2% of portfolios are in alternatives now, where we think over time that's going to trend up to sort of 9 to 10%. So having a low minimum is a great way to allow investors to dip their toe into art as an asset class and build their position up in different paintings over time. Alternatively, for ultra high net worth individuals and institutions, they can access a diversified portfolio of art on our platform through 2 fund structures that we have launched. The first is an AMC, which is Luxembourg based. It's listed on the Vienna Stock Exchange. Investors can invest in that through the ISIN code. There's a minimum investment of $100,000 into that fund. It's a $60 million 7-year fund. For investors out of the US and other offshore markets, we've also launched a Cayman feeder fund product. It's a $150 million fund, again with a 100K minimum, and that will give investors access to all the art which is listed on the Mintus platform. So we've developed structures that accommodate multiple different investor types and hopefully make it easy to do business with Mintus. Mintus will offer a bulletin board where we are matching supply and demand for both investments into the paintings and the AMC or fund-to-fund product. We will do that periodically based on the published net asset value or valuation of the paintings, which there will be an NAV published each month. That'll be prepared by an independent consultancy called Johns, who are globally recognized as a market leader in that field. They work with the big auction houses and a lot of individual collectors. But I think stepping back from that, I think it's important to recognize that this is an illiquid asset class at this moment, which is why we think the allocation to art of 3 to up to maybe 10% at the top end sort of makes sense and sort of factors in that it is illiquid and that the timing of proceeds back to investors will be uncertain. We do target hold periods of anywhere from 1 to 5 years, so there could be early liquidity, and if we get the right price, the Art Investment Committee will assess that against what our target investment return is. If it reaches that level, then clearly we will sell the painting, return capital to investors, potentially in a shorter time frame. But we think a sensible assumption is to think about a 3 to 4 year hold period on average. The majority of Mintus's income comes from performance fees. So when a painting is sold successfully, Mintus is allocated 20% of the cash profits of that painting. So similar to a carried interest model in private equity or a hedge fund. We think that this provides really strong alignment between Mintus as the fund manager and the fund investors. When the investors make money, Mintus also makes money. And just to reiterate, that's based on cash proceeds, not a sort of mark to market each year. So it's a cash on cash return and incentive. Alongside that, Mintus also charges an operational cost fee and a management fee. So the paintings obviously have to be stored, they have to be insured. There's obviously valuations done periodically, and there's also administration. But these costs, which top out or are capped at 14%, are built into the offer price of the painting. So we take the purchase price, we then gross it up with these fees, and that becomes the offer price out to investors. So it's factored into that price, and it's got that margin of safety that I talked about built into that. So as an example of this, we've got a Andy Warhol self-portrait on the platform at the moment. The $5.2 million offering price, that includes all the fees to insure, to store, and to administer that investment for that painting over its life. If the painting is sold early, there is a partial rebate of fees, but I think the important thing is that it's all built into the upfront investment cost, so investors won't be called on for fees over the life of the hold period. So investing in blue chip, high quality art, we still think absolutely makes sense in this environment. There's negative real interest rates. We still think inflation is going to be running in high single digits. Interest rate increases are going to be incremental and will take time to catch up. But also, we anticipate there's going to be ongoing volatility in equity and bond markets as there's further macroeconomic and geopolitical shocks. So cornerstoning your portfolio with contemporary fine art that has got lower levels of correlation but strong long-term investment returns, we think makes sense. And if we look back to a recent example of the art market and how it's performed in a recessionary environment, the global financial crisis is the obvious comparator. So in 2009, you did see volumes of artwork sold come off, but I think it's important to understand what the drivers of that was. And this is a very supply-led market. There's only a limited number of Warhols, Basquiats and Picassos in the market, and obviously they're not being produced anymore. So the market is determined by what artwork is made available at that point in time. So Mintus, given our fund structures and the way that we operate, if there is a downturn in the market and we do see demand softening and confidence sort of eroding, then we can hold off and we can sell the following year once we see that demand and buoyancy come back into the market. So it's all about leveraging our network, leveraging our expertise to really find the optimal time to sell our artwork through the right channels in the market to deliver the investment returns that we anticipate and that we've told investors that we can deliver. I'd also like to highlight the benefit that investors in art that Mintus has on the platform enjoy, given the way that we procure art and the model that we adopt. So as I said earlier, $65 billion worth of art is traded each year. Probably about sort of 45 to 50% of that is through the galleries or through auction houses. If you buy art through one of those channels, the additional fees that they charge can range anywhere from 20% at a gallery up to 30-40% if you're buying through an auction house. And that's what they call the buyer's premium. Obviously, we at Mintus are procuring the bulk of our art directly in private transactions. So we avoid that 20 to 40% fee that's levied on the artwork. So why can we get that sort of arrangement? Well, one is that we are going to be procuring art regularly. So we are going to be a scale player. So we're going to be sort of frequent buyers in the market. But also, really importantly, we can align ourselves strongly with the vendor or the artist if it's a primary artwork. So we can allow the vendor of the artwork to the Mintus platform to retain a stake, 20% say, in the painting. So they can get the initial cash from the Mintus transaction when we sell it on the platform. They can then retain a 20% stake and ride that upside over the whole period alongside us. They can't control when the painting is sold. Mintus has an unfettered right to do that, but they can clearly sort of continue to ride that upside and get a further sort of payday when the painting is sold. In some cases where we think the art is sort of extraordinary or we are buying on a really sort of compelling price, we do share some of the Mintus performance incentive with the vendor of the art as well. So we are really looking to sort of partner with the art market to create a complete new channel to market. Over 90% of investors on the Mintus platform have never invested in art before. So we're really looking to open up that private wealth, mass affluent part of the market, which is why that the vendors and collectors and some of the galleries are really keen to work with us. Cards are obviously sort of highly expensive and take a lot of time to sort of maintain. It's also difficult sometimes to sort of really anticipate or to assess what condition that the vehicles are in. We've also looked at the whiskey and watch markets. Both of them are interesting, but they are less regulated than the art market. And ultimately, all three of those markets are much smaller than the art market. So the art market has been around obviously for a very long time. People in the know and that understand it have been buying and selling art and making strong investment returns for hundreds of years. So we've got this really well-established, regulated market which we're playing into, which is why that's been our focus. The quality of the data in the art market has also improved significantly. So over the past sort of 40 years, a number of institutions have really assessed and chronicled all the transactions that have happened. Alongside that, there's also much stronger records on provenance and condition reports. So part of the Mintus investment process is clearly to get full ownership records and to conduct sort of extensive condition reports. So in the UK, which is where we're regulated, HMRC dictates that every piece of art that is bought and sold has to have a full ownership track record. So we're just completely eliminating that fake or forgery risk. And then on the condition report side, we're clearly only buying artwork that is in optimal, pristine condition. So if you compare that to other alternative asset classes where they don't have the extensive data banks, so it's harder to get comparable transactions to really pinpoint what we think the right entry price is, which we can do in art. They don't have that, and they don't have the regulatory overlay, which we do in the art market, and we do at Mintus as being an FCA authorized fund manager as well. Through our strategic supplier relationships, we are looking to bring over $150 million worth of blue chip contemporary art onto the Mintus platform over 2023. The two pieces that we've currently got on offer for investors are an Andy Warhol self-portrait and a painting by George Condo called The Outcast. Andy Warhol is obviously one of the leading contemporary artists globally. I think he's the highest grossing contemporary artist of all time. His artwork over the past 40 years has delivered on average 11% investment returns versus the S&P over the same period of 7.8%. So he really is the bellwether of the contemporary art market. So we've got a self-portrait on the platform which we are offering to investors at $5.2 million. We've had it independently appraised by Johns at $6.8 million. This is a painting that has been in private ownership since 1991. It was last exhibited in 2003, and it's one of a series of 42 paintings. So what we've been able to do, given the artwork and the artists, is we've been able to look at comparable transactions and do a lot of work on entry price and think that we've managed to secure that on advantageous terms. And we think it's a very interesting piece to have launched the platform with. The second piece is George Condo, painting called The Outcast. A lot of investors wouldn't have heard of George Condo, but he is the highest appreciating contemporary artist over the past 20 years. He's still alive. He lives in the US, still producing art, but he's not prolific. The piece that we've got is being offered to investors at $2.9 million. We've had it appraised at just over $3.1 million. And we think it's really exciting because his recent auction track record is very strong. Average investment returns is 16.5% over the past 20 years versus the S&P 500, which has delivered 7.4%. So we're very excited to be offering Condo, who's one of the most sought after contemporary artists, and from an investment perspective has delivered consistently strong returns over the past 20 years due to really strong international appeal and strong demand at auction. So we think it's a really strong, fantastic offering to investors, and the type of painting and artists that we're going to be listing more of on the platform through 2023.